Hello everyone. Today in this video, I am going to explain you about the accounts of non-trading concerns. The concerns are of mainly two types: trading concerns and non-trading concerns. The main objective of any business concern is to earn more and more profits. The main objective of any business concern is earning more and more profits. For this purpose, the business concerns buy and sell the goods and services. But there are certain concerns whose objective is not earning profits, but rendering services to its members and society, called non-trading concerns. So the main activity of a non-trading concern is not trading. They do not buy or sell the goods and services, but they are always ready to render their services to its members and ultimate society. For example, educational institutions. They always provide education services to the students. Hospitals. They provide medical services. Libraries provide various valuable books. Charitable organizations. They help to the needy and poor people. And also clubs, etc. In non-trading concerns also, accounting is required, because in order to avoid the misappropriation of cash and goods, the proper accounting is required in non-trading organizations also. That's why in non-trading organizations, two accounts and one statement is prepared. They are, first one, receipts and payments account. Second one, income and expenditure account. And the third one, balance sheet. Balance sheet is as usual in case of trading concerns and non-trading concerns. But the preparation of accounts is different in trading concerns as compared to the non-trading concerns. In trading concerns, a cash book is prepared for recording all the cash transactions, and then trading profit and loss account is prepared to find out the profit or loss. But in non-trading concerns, receipts and payments account is prepared for recording all the cash receipts and cash payments. So it is just like a summary of a cash book. Similarly, in trading concerns, a trading profit and loss account is prepared in order to find out the profit or loss. But in non-trading concerns, an income and expenditure account is prepared. And finally, the balance sheet is prepared in both the concerns. The non-trading concerns may be classified into three types: trust, society, and Section 8 companies. The main objective of Section 8 company is also to render services to the society. There are some differences between receipts and payments account and income and expenditure account. While preparing these two accounts, care must be taken. First of all, we should know about the nature of transactions. The transactions are of mainly two types: revenue transactions and capital transactions. So we should be able to identify the nature. before preparing these two accounts. Let us see the differences between receipts and payments account and income and expenditure account. The receipts and payments account is a real account by nature. As all of you know very well, the accounts are three types. They are personal account, real account, and nominal account. Every account will have a particular nature. Here, the receipts and payments account nature is real account. So based on real account rule, we will record the transactions. All the cash receipts are recorded on debit side, payments on credit side. Income and expenditure account. The nature of income and expenditure account is nominal account. As per the nominal account rule, the transactions are recorded in income and expenditure account. What is the nominal account rule? Debit all expenses and losses, credit all incomes and gains. On this basis, the transactions are recorded in income and expenditure account. So, the nature of receipts and payments account is real account, and the nature of income and expenditure account is nominal account. In non-trading concerns, the receipts and payments account is prepared instead of cash book. In trading concerns, a cash book is prepared for recording all the cash transactions. But in non-trading concerns, instead of cash book, receipts and payments account is prepared. So, the receipts and payments account is nothing but the summary of cash book. But in income and expenditure account, instead of profit and loss account, in non-trading concerns, the income and instead of profit and loss account, income and expenditure account is prepared. In non-trading concerns, instead of profit and loss account, income and expenditure account is prepared. In trading concerns, trading profit and loss account is prepared to find out the profit or loss. But in non-trading concerns, income and expenditure account is prepared. So, the income and expenditure account is the substitute of profit and loss account. Next, the third point, based on recording of transactions relating to various time periods. In receipts and payments account, all the transactions relating to previous year, current year, and the next year are recorded. But in income and expenditure account, only the current year transactions are recorded. So transactions may be belong to previous year, current year, and next year. While preparing receipts and payments account, all transactions are recorded. But while preparing income and expenditure account, only the transactions relating to the current year are recorded. Next, fourth difference is based on nature of items or nature of transactions. The transactions are mainly two types, capital, revenue. While preparing receipts and payments account, transactions of capital and revenue nature are recorded. Both capital as well as revenue transactions are recorded in receipts and payments account. But in income and expenditure account, only the revenue transactions are recorded. The items of revenue nature are only recorded in income and expenditure account. Then what about the capital items? All the items of capital nature will be directly taken into the balance sheet. Next, fifth difference based on adjustments. Adjustments like outstanding expenses, prepaid expenses, accrued incomes, incomes received in advance, depreciation, etc. are not taken into account while preparing receipts and payments account. The receipts and payments account is just like a cash book. So, while preparing this account, no such adjustments are taken into the consideration. But while preparing the income and expenditure account, all adjustments are properly taken into consideration. So, based on adjustments like outstanding expenses, prepaid expenses, depreciation, etc., there is some difference between the receipts and the payments account and income and expenditure account. While preparing receipts and payments account, no adjustments are taken into consideration. But while preparing income and expenditure account, all adjustments are properly made. Next difference between receipts and payments account and income and expenditure account is balances. A receipts and payments account will contain opening balance as well as closing balance. Both opening and closing balances. But income and expenditure account contains only closing balance. The final balance in income and expenditure account. In other words, the difference between expenses and incomes is the closing balance here. It may be surplus or deficit. The balance in receipts and payments account represents either opening balance or closing balance. It is nothing but cash in hand or cash at bank. But the balance in income and expenditure account represents either surplus or deficit. The excess of income over expenditure is called surplus, and the excess of expenditure over income is called deficit. So these are the main differences between receipts and payments account and income and expenditure account. So care must be taken while preparing these two accounts. First, receipts and payments account is prepared, and then income and expenditure account is prepared. Finally, a balance sheet is prepared in order to estimate the real financial position of the enterprise. Next, while preparing these final accounts in non-trading concerns, we must understand about the important key terms like donations, legacies, life membership fees, subscriptions, etc. Without clear understanding of all these terms, we cannot proceed for preparing receipts and payments account or income and expenditure account or balance sheet. So, first of all, we should be able to understand the key terms like donations, legacies, subscriptions, entrance fees, life membership fees, etc. All these items may be divided into capital items or revenue items. If these items are treated as capital items, they are directly recorded in balance sheet. If they are treated as revenue items, they are recorded in income and expenditure account. So, care must be taken while classifying the items into capital or revenue. Thank you.